Hi everyone, Merry Christmas. I hope you're having had a wonderful day in Christmas Day and you managed to get all the gifts you've been hoping to get and things are great at your side. I'm currently still in Bangalore and I'll be in Bangalore till New Year's is over. So I'll be trying to record remotely and get these videos out to you. So do bear with me. Sometimes the audio may not be great. Video might be a little spotty, but I am trying to get something relevant and useful out to you. Today the market is closed because it's Christmas Day, so there's really nothing important in the market that happened which we need to discuss about. So I thought I'll take this opportunity to talk about importance of keeping focus and keeping things which are important ahead of you. First, there's been a rise in the number of people, not only in India but worldwide, about people who are getting more and more addicted to investing in the short term. That's the future and options and things like crypto, which has made things far worse than they need to be in our world as it is right now. We have a propensity to gamble in life. We human beings have a tendency, because of the dopamine high we get in the risk and reward cycle of gambling, we tend to get addicted to it very easily. There's a huge part of our population which falls victim to this, and the stock market has become the next place where we find people who have a tendency for this, into the trap of future and options and crypto especially. There's a lot of crypto news has been made around thanks to all the macroeconomic news and speculation of what will happen with Trump, what will happen with Elon Musk. And, the way the social media is set up, it's very difficult to find out what is true and not true in the source of information. And if you're not careful, you can become a victim very soon. It happens to even people like me and Anand. That's why we always take time and we delay any of our investment ideas we have, or even any purchases we decide to make. We try to slow it down. It is always better to miss an opportunity than to regret later on, because regret is far more painful than missing something. Because let's say you miss something and later on you find out that it was a scam. That few moments when you missed it, you might have FOMO, but once it comes out as scam, you're rather relieved and it doesn't haunt you for the rest of your life. But in the other case, you go ahead and dive into something and then you realize you've been scammed. That feeling of being cheated will be there to haunt you for the rest of your life. So that is why I always say take your time. Don't rush into these things. And this coming year, things are going to be even more volatile and there are more scams which are out there, especially for investors, trying to allure us into quick returns and quick wins, as they say. So I would advise you to be slow and methodical in your research and be extremely cautious in any investment you wish to make, making sure you really know what you're doing. This includes even listening to advice from people like me, listening to people like Anand. You listen to us, you understand it, process it, but then take your time to really know what you're doing before you do it. This is one of the main reasons I don't like going on giving this so-called patas list or hammering it out everywhere, because of the simple reason I would love for the fact that you find this list of yours for your own risk assessment which you do, your own financial goals, to set them forward and to invest according to that and not just blindly follow what we're saying. My endeavor has always been, since me and Anand started this channel, to start at anything which we did, including the books he's written, is always about education first and making sure you understand what is happening. We have never been keen on saying, give me this and I'll give you that. No, we are fundamentally believe that you are much better off if you learn, because learning will give you the confidence, because you need that confidence and the conviction to be a value investor. Because when you invest in something, you will see it going up and down, like what is happening in our microfinance sector. As I spoke in another video, you can see it from where it launched, the highs it's gone, to the lows it's sitting in right now, and how long it might take to recover. You have to have the stomach to hold on to it as a value investor. So that is one of the main reasons. I want you to educate yourself and not rely just on me and my brother telling you what to do, when to do, and how to do. So I hope you do understand this. And we are currently going through this cynicism in our investing, not only in, I would say, investing, it is throughout our society now, thanks to the way social media is structured. And we have been told that things are far worse than they ever were. And that is not true. Things are not far worse than they ever were. Yes, there are disappointments, like in everything in life, which we face and we have to get through. But by and large, the world is in a much better place than we were 10 years ago, 20 years ago, even 30 years ago. Things are better and things are getting better. But what I do want to say is, it is always important to remember that cynicism can be detrimental if we allow it to creep into our investing style. Because when you become very cynical, it is very hard to be a value investor because you're constantly in doubt and you're shrouded with all kinds of rumors and you find it very hard to see which way to go forward. So that is one of the main reasons I wanted to be skeptical. Skeptical meaning checking, questioning, but I don't want it to become cynical. Cynical is where you think everything is rigged against me, there is no hope in any of this, and whatever you do, the stock market is a big gambling house and you tend to lose money. It is not true. I've shown you repeatedly, looking back at old data and showing you how we've invested, you can have made good returns even if you did not know how to pick value stocks. Yes, we have been fortunately in a bull run, in a bull market for the last 10 years or so or more. So any returns we look at will be much higher than normal and standard. So you can discount it by 10%, 15%, whatever returns you calculate, looking at hindsight and say, okay, that's thanks to the bull market. But if it was a normal market or if there were patches of bear in it, my return might have been 10, 15% lower. Going forward, yes, we may have bear markets, but bear markets usually tend to be very short-lived compared to bull runs. So if we do get into a bear rut, these are much shorter than bull markets are, and I want you to remember that. Bull markets tend to last for a few years, meaning 5 to 6, 7 years, while bear markets usually tend to last at maximum a few quarters or at worst case a year. We can see this in history, so if we do get into this situation next year, we can expect the same kind of returns in terms of a bear market or a bull market. Aside from that, next year, let's say the world does go even crazier, we get into a situation where there's worldwide conflict and there is deep mistrust around the world. Even in situations like that, as investors, you can find pockets of value here and there. And if you're willing to believe in the company and believe in the business and understand the business intrinsic value, you should be doing well. So this is my message for you this Christmas. I do wish you a wonderful Christmas, and tomorrow will be another day the market is open as we get into the last few days of this year before we close out this year. Do remember, like I've said in my previous videos, starting January 1st, we will try and do a 52-week challenge where we invest every possible investing day the market is open next year in tiffin coffee ranges. Like I said, we do not plan to go all out. That is not the point of that exercise. That exercise is just to get you into the habit of investing, to get you into the habit of seeing the little money you put going up and down in the market and realizing that these markets tend to move up and down. But in the long run, if you've bought good companies, you tend to move in an upward trajectory. So my hope is if we keep investing for 52 weeks and we hit most days the market is open, by December of 2025, when I'm sitting here and I'm having another video with you about that Christmas and we're discussing, I will have a screenshot of what I've done for the year, and hopefully you can compare it and see what you have done for the year, and we'll see how consistent we have been. Because to be a great value investor, it's nothing but being consistent. Consistency is what gives you the rewards. It's not about the amount of money you put in. The money can be small. That is the power of compounding. So it is about being consistent and deliberately taking action on every single available day of investing. It has to be small, and we keep making those incremental adjustments and we keep moving forward together. I know there are people in our group who are far more confident and assured of themselves and their ideology of investing, and they know what they're doing. For them, do as you wish. Whatever your pace is, whatever your style is, I encourage you to invest and to build towards a better future for yourself. This is meant for people who are just beginners like me or anybody in my YouTube group. All of us are trying to get on to this idea of investing and putting money away for the future. So again, enjoy your holiday. I'll be back again tomorrow with another video about something specific in the stock or the stock market. But other than that, I just wanted to leave you with something positive and to keep in mind, and how to avoid falling into the traps of investing and how to steer clear of that. Thanks for watching the video. As always, do subscribe to this channel and share it with friends and family who might enjoy this kind of content. Nothing more to say other than that. Thank you for watching and see you tomorrow. Bye. Merry Christmas.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.